You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 26th day of July, 2018. So glad to have you with us today. Thanks for joining. If you're returning, welcome back. If you're here, perhaps for the very first time, allow me to extend a special CFRN welcome to you. We're glad that you're here. We have been at this now for quite some time. We're well into our second decade of broadcast history, so if you're new, grab your day planner and pencil us in for the next one as well. All right. Okay, now I've got a chart up, S&P 500 Emini Futures. If you cannot see the chart, just go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in 30 seconds, and you'll be good through the end of the month, which at this point is not long. In fact, beginning of August, you'll have to do it all over again. But if you do it on August 1st, then you're good for the whole month of August. Okay, 30 seconds for 30 days. You can also find us at youtube.com/CFRN/live. bookmark that page, you'll always have one-click access to the show. Okay, Michael has to dash, so he's going to pop in first today and give us a recap of everything that happened in the live training room this morning. And then I'll be back and we'll go over numbers and look at charts and talk to John and all that jazz. So, Michael, if you're ready, take it away. Michael. This is not how you take it away, Michael. Okay.
Hang on a minute, Dwayne. I'm having trouble with my with my headset.
Yeah, no problem. We'll wait.
I've been having trouble with it all morning. I gotta go get a new one after I get this room thing straightened out. Okay, I can take it away now.
You got it?
Yeah, I got it. Thanks. Okay, you should be looking at my screens.
Yes, we are.
They're there. Okay, good.
They have arrived.
Excellent. All right. Here we go.
All right,
Let me get into
this.
this.
It's all yours.
Excellent. Thanks, Dwayne. Thanks. Appreciate it. Okay. Good afternoon, everybody. Today is Thursday, the 26th day of 2000. I was just thinking of something. The 26th day of 2018. We have a partners meeting tonight, 9 p.m. Eastern time. All right. If you want to get into the partners meeting, you must be an active partner before the meeting. Okay. Usually a link is sent out around 6:30 p.m. Eastern. Okay, for the meeting. So if you want to get into that, you gotta look for that link and make sure you're an active partner by that time. Okay, now if you have not taken a free trial with us, go to the homepage here at CFRN.net. Right over here on the side, it says 5-day free trial apply.cfrn.net. You can click on that, or should you choose, you can scroll down here to where it says free 5-day trial and click on that. And that's going to bring you to this page where it just says start the free trial. If you click there, then you'll be brought here. On this page, all we ask for is your email, your first name, and how you found us. Click that submit button, and you'll be sent a confirmation link. Okay, you must click on that confirmation link. If you don't click the confirmation link, we don't know that you took the trial. So you got to make sure you click that link. Okay? Okay. The spreadsheet. Today, as I said, today is the 26th day of July 2018. And if you're going to read the spreadsheet, you can read all the CFTC risk disclosure stuff down at the bottom. Today, well, we made 3 ticks in the euro and 10 ticks in crude. That got us to 118.75 on the morning session. And we took 20 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trades. So on the month now, we're at 1640. That's over 18 days, only averaging 91 a day. It's been a slow month. On the year, we're at 20,918. That's over 135 days, averaging 154 per day. 154 per day. Okay. Now, let's go back here and look at more stuff. Well, before we do that, we'll jump in here and start out with the trade setups that actually occurred today. Okay, now this was gold. We only had one that we actually got filled it right there, and we ended up with a break even on that. It ended up going down and doing what it should have done. You know, the green line got down into the cycle, and the good thing about this was the MA1 was red and the cycle was red. Okay, so that was a very high probability trade setup. A very high probability trade setup there. There was one more right over here that ended up being a break even, and then the market just got really flat. Okay, and that was it for the morning session for gold. Let's see the euro now. On the euro, hang on a second. On the euro. Okay, like I said, my microphone's been messing up on me all morning. On the euro, we had nothing coming through here. Then we finally had a shorting opportunity right there that I didn't get filled on. We had a short right there that I got 1 tick out of, and another one right here that I got 2 ticks out of. Okay, then we were looking for an opportunity. It got really choppy in here. Pretty much all the markets got really choppy at this point. Euro looked like it was going to start taking off to the upside. It put in a higher swing, then it came, put in a lower swing, and then it just got choppy again. During the break, it looks like there was a shorting opportunity right in here, pushing a new low for the day, and that was it on the Euro for the morning. We ended up with +3 on the Euro. And on Crude, look at that mess right there. Told you everything got really choppy about the same time here. On the Crude, we started out here with a break even. All right, then we picked up 10 ticks on this one right here. That's where we got the goal for the day. Then we missed this one. I don't know what I was doing, how I ended up missing that, but we ended up missing it. And let's see, there was another one right here that we missed, and there that we missed. I'm thinking I just didn't get filled on these. Or, I don't know, maybe I had stepped away from the desk for a minute or something. But anyway, we had a break even there. Then it got really choppy. Still really choppy, and slowly pushing in a new high on the day. Then during the break, had a direction change, started pushing down. It was a shorting opportunity. It looks like right in here was a shorting opportunity. All right, and then it changed directions a little bit, and it doesn't have anything right at the moment. We don't have a single thing right at the moment. Okay, now the ES. Ooh, come on. All right, the ES started out right below the weekly trading zone here. It went right back through it, then right back through it again, then back into it. It just kind of consolidated inside it, right above it, right below it. And we took one opportunity right here. We ended up with a break even when it closed down below the MA1 right there. And then I was just staying away from it after that because it wasn't giving any kind of trend at all. And that was it, guys. That was all we had, the ES this morning. Okay, so we'll go back here. As I said, today's the 26th day of July, 2018. We made 3 ticks in the Euro and 10 ticks in Crude. That put us at plus 118.75 on the morning. Today it took 20 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trade opportunities. On the month now, we're at 1,640. That's over 18 days, averaging $91 per day. And on the year now, we're at 20,918. That's over 135 days, averaging $154 per day. Okay. If you have not taken the free trial, like I said, just go here to the homepage at CFRN.net. Right here on the side, it says 5-day free trial, apply.cfrn.net. You can click there. And that'll bring you directly to this page where all we ask for is your email, your first name, how you found us. Hit the submit button. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. So you got to make sure you click that link. Okay. Okay. With that, I'm going to slide this back over here, and we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay.
Ready we are.
Charts. Excellent.
Ready we are.
Again, everyone, if you want to get into the partners meeting tonight, you must be an active partner before the meeting begins at 9 p.m. Eastern. Okay? And I will have a new headset before the meeting.
All right. Okie doke. And the recap of the recap was?
Today it took 20 minutes and 2 trades to get to $100 per contract. 20 minutes and 2 trades.
All right. Good job.
Thank you.
Okay.
Thank you, sir.
All right. Well, I know you got things you got to run off and do, so I'll see you at the meeting tonight.
Okay, excellent. I'll talk to you. I'll talk to you then. All right.
Okie doke.
And if anybody's got any questions, you can always email support@cfrn.net. Okay. And I will respond to whatever questions you email in. If you have questions you want us to go over in the meeting, then you should, excuse me, you should email them to us ahead of time before the meeting, So we'll be able to go over them quickly in the meeting for you. Okay?
All right. John's not here, is he?
Let me check.
I know he said he was coming. He said he was coming early.
Okay, let me check. John. No, John's not here yet.
All right, I'll keep an eye out for him.
Okay, all right. Thanks.
All right, Mike. Okay, folks, so let's take a look at some big news, really big news on a Thursday. Skrill. Have you ever heard of Skrill? Skrill. They're an online payment service. They used to be called Money Bookers. Money Bookers. You know, we transfer money around relatively easily in the U.S., all sorts of methods and ways. But there are countries that it can be difficult to do financial transactions with, and for reasons which you're obviously already aware of, Pakistan being one of them. I don't believe they don't have PayPal at all. I think the only way you get in there is with Western Union or maybe a MoneyGram. Anyway, Skrill is an online payment service. Used to be called Money Bookers, and they have now enabled their wallets to instantly buy and sell cryptocurrencies, including BTC, BCH, ETH, and LTC, using more than 40 supported fiat options. So 40 different currencies from around the world. And I don't think the U.S. is one of them. The company said it purchases and holds the cryptocurrency via a recognized cryptocurrency exchange. Here's the rub, bub. Typically, you go online, you buy cryptocurrency, you put it in your wallet. Well, I'll read this one more time and let you take from it what you will. They are enabling their wallet so that you can instantly buy and sell cryptocurrencies, all the ones I mentioned, using more than 50 different types of currency from around the world. Then what happens? Then the company, after it purchases crypto on your behalf, so you're not actually, you follow me? They're going to purchase it on your behalf. It sounds almost like one of these gold ETFs. They will purchase and hold the cryptocurrency via a recognized cryptocurrency exchange. Now, I have no reason to doubt their integrity. I don't know anything about Skrill or Money Bookers. It's just a little bit of a twist on what we've seen others do. Now, the cryptocurrency capability is available at launch in over 30 countries. I don't think I saw the U.S. in there. We got everything from Australia to Argentina to Bulgaria to Colombia, Croatia, Greece, Hungary, Ireland, Mexico, Malta, Peru, Poland, Portugal, South Africa, Switzerland, even the UK, but no US of A. The company plans to roll it out to additional markets and extend the service to its mobile app and PaySafe's NetTeller digital wallet in the next few months. The CEO of Skrill said, "The world of cryptocurrency trading is exciting and dynamic, and our digital wallet service very much lends itself to this environment. I'm confident that the ability to trade in cryptocurrencies quickly and easily through Skrill will appeal to consumers both now and in the future. We know many people want to experiment with cryptocurrency trading, but don't know where to start, and we've made the entire process very straightforward." Well, yes and no. We'll be revisiting Skrill on this subject, I'm sure. The White Company. We talked about these folks a long time ago. Remember the White Company? Okay. They're a cryptocurrency concierge and luxury marketplace. They have announced they've surpassed $100 million in cryptocurrency sales and transactions since their launch in 2017. Over 25,000 deals have taken place for goods including, but not limited to, Lamborghinis, rare art, global excursions, and conversions to fiat. The platform also plans to launch a commercial processing solution by the end of the third quarter of this year. Now, the CEO, Elizabeth White, said the usability of crypto is paramount for its mainstream adoption. A new asset class has been created through this digital currency boom, but holders have been largely unable to spend their new wealth. We've made it our mission to help consumers use crypto to purchase goods, experiences, or simply cash out. And our recent stablecoin and wallet platform furthers that goal. This milestone is a testament to the demand for widespread usability, and we're excited to continue serving the market and working with merchants in the near future. Recently, the company decided to accept Bitcoin Cash, which is BCH, and says there has been a high demand by BCH holders. Gold Krugerrands and Beyonce/Jay-Z tour tickets being the most popular items. Gold Krugerrands and the Jay-Z tour with Beyonce has been the most popular item. As a result, the White Company has begun offering exclusive items available for purchase only with BCH, starting with jewelry from Cartier. BitMEX, an exchange offering cryptocurrency trading with very high leverage, has reported more than 1 million BTC traded on the platform in the 24-hour period ending July 24th. The 1,041,748 BTC traded that day shattered its previous record of 800,000 traded within 24 hours. The CEO and co-founder had this to say: the astronomical surge in trading volume, coupled with the steadily rising price of Bitcoin, is reflective of the market's increasingly sophisticated understanding of the potential of Bitcoin to redefine global markets. The achievement was also largely thanks to ongoing capacity increases accomplished by scaling our engine architecture. The record that BitMEX has set marks a major milestone in the cryptocurrency's overall, the industry's overall path to maturity. He says, "I am delighted that BitMEX's easy-to-use and highly secure trading application has helped to onboard yet another tidal wave of people from all around the world to the crypto market and given them the confidence to participate on the largest scale ever seen." Advanced Micro, whose mining-related sales accounted for 10% of its overall revenue in Q1, has reported its Q2 results. Despite a quarterly increase in overall revenue of 7%, the computing and graphics segment revenue was down 3%. The company explains that this decline was primarily related to lower revenue from GPU products in the blockchain market. For the third quarter of 2018, AMD expects revenue to be driven by the sales growth of Ryzen and EPYC products, partially offset by lower sales of GPU products in the blockchain market. Those should start to turn around. AMD's CFO commented on the earnings call with analysts that graphics revenue was down, primarily driven by lower blockchain sales, partially offset by stronger data center sales. We believe blockchain-related revenue declined from approximately 10% of our revenue in the first quarter to approximately 6% of our overall revenue in the second quarter. So there's a bit of crypto news. Now, let us take a look at the numbers from around the world and see what's cooking. Now, these are cash markets. We'll get to the futures in a second. Here in the U.S., the Dow is currently up 121 points. NASDAQ is down 76. S&P 500 is down 6.5. So we've got the same issue that we had yesterday with the S&P and the Dow. S&P is negative by 6, which in theory means that the Dow should be down 65, but it's not. It's positive by 121. We'll talk about that more. The Russell 2000 is positive 10.5. So no movers, no shakers, and it is a mixed bag. Again, the Dow positive, the Russell positive, the NASDAQ and S&P both in the red. Crude oil added 42 cents today in the commodity basket, trading 69.72 last. Gold lost $6.30, trading 12.25.50 last. In the Asian markets, the Nikkei at the close was down 27 points. Shanghai was down 20, and the Hang Seng was off by 139. Last but not least, in Europe, big green day there. The FTSE closed positive 5 points. The DAX was up 230 points at the close. And the CAC added 54. So there you have it. Mixed day here at home in the U.S., a red day in Asia, and a solid green day for the European markets. We are in earnings season, and Facebook is on pace for its worst day ever. You may have heard about it. Facebook reported earnings. They're on pace for their worst day as a public company after opening trading down 19.6% on a second quarter revenue miss and disappointing daily active user count. Shares fell as low as $174.48 Thursday morning. Today, now, yesterday, Facebook closed at $217.50. Today's plunge knocked roughly $120 billion. Yeah, that's B as in billion. $120 billion in market value off the tech stock and is dragging the rest of the sector lower. Before today, Facebook's largest one-day loss came in July 2012 when it lost 11%. Well, let's just take a look-see. And we'll go here and here. Facebook. Whoa. You'd almost miss it, huh? Here. All right. Yeah, there we go. Yesterday's close. Earnings call. Markets open. Quite a whack. What does that look like on a weekly? So there's your weekly candle. when you put it on the monthly chart, look at how the monthly ranges price, the swings in price, and pretty small candles here. Starting to see some different, and this is definitely different. And that's a pretty bearish statement on that monthly chart. And then we've still got today and tomorrow. Facebook. All that talk about we're going to quit Facebook and boycott, while the stock's down, and it does affect many investors who own Facebook via their 401k or retirement plan, whatever it might be. But is it going to change Mark's quality of life? I don't think so. And will they snap back? I'm pretty sure they will. Let me check and see if John's here. I'm going to leave him waiting if he's here. Not here yet. Okay. All right, S&P 500. We'll go to that until John arrives. If that's okay with you. I know he's gonna. There he is, right there. I knew he was on the way. John, welcome to the show. And he's still getting his headset together. Okay.
Hello.
Hey,
Hello.
welcome to the show, John. How are you?
Hi there, sir. I'm a bit late.
Oh, no problem.
Yeah. I was just looking at your chart there.
Mm-hmm. Which one?
And
The S&P?
the S&P. You could be looking at a top right here today. We talked about a continuing rally yesterday, which came in, and the Dow went crazy. Remember I said that if they announce a breakthrough on the tariffs, the markets will explode higher.
Mm-hmm.
Well, that's exactly what happened. However, the effects are waning. First of all, the soybeans, which shot up last night, and if you remember, I said it would be a good idea to go home long the beans yesterday.
They got higher on the open last night, I believe.
They did, and we sold, and it went up quite a bit during the night. We pretty much sold the highs of the grains, and I thought they'd come back, but I didn't think they'd come back down to zero, kind of, back to where we started from. Yeah, but sometimes the market has a habit of bringing the market back to give people a second chance. Mm-hmm. And they also, I've been pretty keen on Newmont mining, and Newmont came in with better than expected results this morning, and it's the only gold stock that's up at the moment. I had a feeling, I think I mentioned that I thought we'd get a bit of a retest in the golds ahead of this GDP number tomorrow. So, we're going to have another big deal in terms of very powerful forces affecting the market, after the close today. If Amazon misses this afternoon, forget about it. I think this bull market, this rally is over. It could actually get pretty bad on the downside, because when you lose, Facebook's one of the most widely held stocks in the world. And even though their revenues, listen, about a year or two ago, they were only making $1 billion. Now they're doing $7 billion in revenues. Right. The stock deserves to be higher. I think it got clobbered.
Yeah, it did. Look at this. Here's a monthly chart.
Yeah, it got
That's
clobbered.
Pretty bearish, wick sticking up top there.
Yeah. I mean, this could be the beginning of this could be the beginning of the end. And don't forget, we got this eclipse coming in tomorrow. So you've got that, plus you got this GDP, and you know, the market may decide. I mean, if it comes in at 5.3 or something, you know, that could wreak havoc. I mean, you know, what I think could happen is you might get a bit of a breakdown in the gold first, followed by a reversal, and then a big rally. And that could spook the markets. Right, already the VIX is, if you look at the VIX, if you want to stick the VXX up,
well, I'm just looking at this, John. I hadn't looked at it before, but I put it on the 30-minute chart. That's Facebook. So you got an island top.
Yeah, absolutely right. No, good point. I knew there was a sort of a trap in the making, the way this thing suddenly went crazy. And by the way, this is the first time Facebook, you know, the clue, if you like, and we had stops in right on the highs yesterday at about 75, whatever it was. I think it was 75.25, somewhere like that, if I remember rightly. And on the NASDAQ last night, right going into the close. So we triggered that stop, and as you know, and now we're at 70. We're 100 points lower on the Nasdaq from where we were last night. And this is the first time that Facebook has made an announcement where the stock was making new highs. Most of Facebook's announcements have been, the stock's been a lot lower, and it's gone higher. So. The fact that it was at the highs was a bit of a trap, you know, a kind of a trap, a bull trap. Now, the thing is that, and so look, you know, the thing that kills a bull market is when you get a shot across the bows. I mean, we haven't seen any stocks get cut in half, you know, for a very long time, actually. But usually when that starts happening, it's getting near the end, because at least the end of a phase, a bull phase, put it that way, because you know, that scares the fund managers, and it takes the risk appetite gets reduced quite a bit. But nevertheless, AMD is up huge today. Somebody put a 22 target on that stock, and it was 15, 16 a few days ago, so it's up dramatically.
You were asking me a moment ago to bring up the VIX, VXX?
Yeah, VXX, yeah.
Okay, go ahead.
Yeah, the VIX is kind of bottoming here, and it's kind of volatility. The VIX should really kind of not go down anymore. And it's sort of put in look, when you get this kind of that chart you had up a minute ago, where it sort of gets a little bit kind of dynamic, if you like. You know, if the VIX were to start going up tomorrow, I mean, it's not
daily right here.
Yeah, it's not really turning yet, but you could have said that about the grains yesterday. So, you know, there's a potential for, and what happens if, you know, the markets do get slaughtered and we open at 34 tomorrow, then you've got an island bottom on the VIX. But yeah, that chart there, you see where you've got the spikes. I mean, that's kind of a sense that
30-minute here.
Yeah, the prices have gotten rejected off the 30 level, and in a way, we have a kind of a negative divergence versus the January highs, because, you know, we haven't gone to lower lows on the VIX, because it was down about 25 back in January, and you know, we're up a sort of a double top on the S&P right now, practically speaking. So and that's a very dangerous thing. You know, double tops in the S&P have put a cap on the market back in 2007, and for quite a while they held the S&P back in the teens, if you remember, before it finally broke through to the upside. Right. So, you know, we're at a virtual double top right now on the S&P. So we're in a pretty dangerous kind of a, you know, situation. We don't know how the market's going to take the very strong growth you know, that may be too much for the market. It could tank the bonds if the bonds go limit down or something like that, which is quite possible. That could spook the market as well, temporarily at least. And but imagine if Amazon misses tonight and it goes down the same amount as Facebook, 20%. I mean, there'll be blood in the streets tomorrow morning, in the tech sector, and you'll have a sort of a 1-2 punch. You'd be probably down another 100 points. So right now, the market, we were long this morning for a bounce, but we actually sold it up around 30, 74, 39. 28.45 on the S&P, and the Dow up around 25.55. So and even the mid cap at 25.03 or so there. Didn't get the high on that one, but the mid cap is coming off again, and the mid cap's kind of been sort of sowing the seeds of doom because it's been failing to make a new high in the last rally effort, and the Nasdaq. The Dow is the last man standing today. It's the Dow is up, and that's a dangerous situation to be in when the Nasdaq's down, the equivalent of 100 Dow points or more, and the Dow's up 100 Dow points. That's not a very good equation. You've got to be very, very careful when that happens. So we're not there yet, and I guess if Amazon beats, then it's all back on again. Maybe people and Facebook could recover, but the problem is when you get a really big gap. First of all, this is the biggest downside gap we've had in the Nasdaq, and jeepers, I can't even remember when the Nasdaq gapped down this much before. It's a pretty big deal, and so if we start making new lows on the day, on the Nasdaq today, it's going to be very good either. So, if we make new lows on the day and then Amazon comes in heavy, there's no hope. The Nasdaq's gonna plunge here in the next couple of days, and you might have got a very badly weekly reversal and a potentially even a bad monthly reversal. So, things can change. I'll never forget beans back in 2008, when beans went to nearly $20, up to about 18 and a half. It was a Friday afternoon, and this could be a recipe for this market. Imagine if the markets do go higher tomorrow and then they suddenly turn late, and sort of have a late Friday plunge, then you can virtually guarantee that the top is in, because I mean, if we do go higher on good news in the morning, and maybe the DP, and then turn, afternoon, about a day from now, and start turning down into the close, then you got to go short, because that kind of a setup could be devastating. This is what happened to the beans on a Friday. Back in some of those, probably August 2008, got up to about 18 and a half. I mean, it looked so bullish. There was a huge monthly up bar on beans, and it was right into the end of the month, and you automatically thought, there's got to be huge follow through, and people are probably saying beans are going to the 20s. It'll be kind of like Amazon. If Amazon does beat tomorrow, people will be saying it's going to go to 2,000. Maybe get up to 1,900 or something, and then if it turns, then watch out below. So these are just a few things to keep an eye out for as we go into what, and then we the Eclipse deal right on, as well. So, and if you remember, we said a month ago the market might top out towards the end of July. So
talk to us for a minute about the Eclipse thing, and
well, look,
how you factor that in, and why you feel it's important.
Well, normally the full moon is bullish for gold and bearish for markets, and they had a pretty good full moon last night, and look what happened to the Nasdaq. The thing about the Facebook gap is it's such a massive gap that, I mean, gaps of this magnitude do not tend to, you know, rally for long. In other words, they tend to go, they tend to keep going down. And it's just like when you get a, you know, like Madrigal that jumps, you know, $100 and goes another $100 higher. You kind of got the opposite now with Facebook, where you're down 20%. We're down about $50 or 40 or 50 bucks in a kind of an eye-opening decline. And you can't believe your eyes. And, you know, if we start developing a downside bar off Facebook's, you know, which we're starting to do, you know, if people just throw the towel late today on Facebook, then you're going to paint a big down bar on Facebook. It doesn't have to happen because it's, you know, it's an unusual stock, and you could argue it's been overdone already. But the market is the market, and there's no mercy, you know, when fear takes over and people are losing a lot of money, you know, they could tend to panic. So
Sure.
The peso has been, as you know, it's been going up ever since this guy was elected. And Mexico made another high today. It's come off that high a bit. The dollar, you know, after tanking on the European news yesterday. By the way, you know, it's very interesting, this strategy of Trump. You know, if he hadn't kind of called Europe all kinds of names and generally set the stage for what happened yesterday, the impact of what happened yesterday would have probably been very minimal, you know what I mean? But the fact that he created all this theater around, you know, that the Europeans have been ripping us off and lose 150 billion a year and all this sort of thing, you know, he set up a lot of expectations, a lot of drama, and it was looking pretty bad, especially when he said he's going to raise the tariffs on cars by 25%. I mean, that's a huge deal. And then and you know, he dropped the hint yesterday morning, if you remember, we mentioned that on the show, that the news might be pretty good. You know, he was hoping that they'd get a deal.
Right.
So when, and the way it all happened, I mean, the stocks were jumping. Stocks were jumping, you know, when that news came out. They literally did explode higher, you know, I mean, the Dow went up 200 points in a matter of minutes. And by the way, the Nasdaq's breaking down as we speak, and it's starting to look pretty bad. So, and if somebody's got advance notice of Amazon numbers and they're not, you know, so good, that, you know, that might be leaking out as well. So but you know, you almost couldn't have scripted it better, the way that announcement came across yesterday. I mean, it was powerful. And I mean, the press were applauding it, and a few times, which is kind of unusual. And the you know, the news was
applauding it.
Yeah, they were, and you know, the news was spectacular because all of a sudden he just turned everything on a dime. From sort of, you know, all of a sudden, you know, Europe was our best friend again, and we're doing everything we can together. And they even had a big hug in the White House. I mean.
Really?
Yeah, I mean, it's you can pull up the Twitter page, it's all there, and I think that probably most of the European leaders today are pretty impressed with the way things have turned positive. So, and you know, I think it's a very good, just the same way as the Mexicans thing started it off, and this is rubbed off on Europe now. I think if it rubs off on China, and they come to the table. I mean, imagine if Xi comes over and they have a similar announcement and it's all smiles and hugs. I mean, you know, it couldn't be better. You know what I mean?
Right, right.
And I think they're probably aiming for that, because at the end of the day, it's very good for Xi. He gets a lot of kudos for it. Trump gets a lot of kudos. The whole world gets a lot of kudos for it. And, you know, they really start going towards this zero tariffs and zero, subsidies and all that, fair, a level playing field. By the way,
Michael P.
sorry,
said
go
that
ahead.
they just asked Trump officials to appear in front of the grand jury. So I don't know which
really?
which officials are they referring to, Michael?
Don't know. That could hurt the market. That could hurt the market. That's the other thing. If anything really bad, remember if something awful comes out here in the next days for Trump, that could tank the market as well.
Mm-hmm.
So, we're definitely living on borrowed time here based on what happened last night. You can't be, it's not the same as yesterday anymore. You got to realize that there's something different going on here. I want to make a few.
Ask you about Blue, B-L-U-E.
Yeah, can I get to that in a minute?
Oh,
I just
sure.
want to,
Yeah,
while we're on the theme,
absolutely.
Look, I think what got me thinking about this is yesterday, Pompeo got a big grilling by the Senate people, and he did pretty well, actually. It did a very good job, defending Trump and his talk with Putin and everything. Mm-hmm. And I mean, this Corker guy, they should get rid of him. Jesus, how can you be in your own party and be attacking the president? It's just an absolute disgrace. And saying, and the funny thing was that he was saying, and what about this president, attacking Europe? 5 minutes later, Trump's making the deal, this deal that was totally unexpected. So the whole thing made him look stupid, calling out Trump for his strategies, but his strategies work. And there's no ifs, ands, or buts about it. And I think it's going to work with Iran. At the end of the day, look, anybody who doesn't understand that Korea is, North Korea, I think the Russians and the Chinese have stepped in a bit to help North Korea, because they'd be out of business by now if the sanctions were as tight as they really should be. They got a bit of relief from sympathy more than anything. But when your currency gets cut from, if you've got a dollar bill in your pocket and it's suddenly worth only 10 cents, it's crippling. You can't even, there's no other word. I can't even think of a word that can describe what's happened to North Korea's buying power. It's been decimated. And the fact of the matter is Iran is in the same boat, and there's nothing they can do about it. They're absolutely, up a creek without a paddle. And they're in dire straits, and it's sort of, a lot of people didn't think Romania would fall, and all these Eastern European countries that were under the iron boot, just like Iran, would fall. But stranger things have happened, and the end of the days could be near for Iran, nearer than you think. Look what happened in all the Arab countries. So. And look, I think they're rejoicing in the Sunni Arab world right now. People don't understand why Trump went over to Saudi Arabia, made his first call. Everybody forgets about ISIS and what he's done in defeating ISIS. ISIS was a huge problem in the world, and it's been 98% kind of eliminated, but it's still popping its head up every now and then, and it's still a danger. But his strategy in getting rid of ISIS was just a second to none. It was unbelievable. It was exemplary. He went to the heart of the matter, and he basically, look, he's going out and calling out Muslims in his campaign, and then as soon as he's president, he's embracing them and turned, animosity into friendship overnight. It was incredibly successful strategy. Mm-hmm. And sort of diffused the whole situation, and then got everybody on board to eliminate, I think the problem with ISIS is it arose from extremism, from Islamic extremism. If there wasn't any extremism in the Islam world, Islam would be, embraced like anybody else. And I think it's being that way against, because as long as there's no harm to be done between religions, the world would get on a lot better. So
yeah, people have been killing each other in the name of God forever.
Exactly.
Since time began.
So So, and they perpetuate this through their education. It's just like the Irish Protestant Catholic thing that's been, went on for a century before it kind of got diffused to the point it's at today. Forgot what the theme I was getting on earlier on that I wanted to elaborate on. Oh, I know what it is. Look, so Pompeo comes out with a kind of a surprise and says, the U.S. doesn't recognize Crimea, seizing of Crimea, and won't rest until it's back in Ukraine. Look, I think Putin should have, certainly now with Trump, they should have a kind of a summit, a Crimea summit of world leaders, and get around a table and hash this deal out, because I can tell you, I mean, if Putin goes, maybe something could change, but as long as Putin's around, I mean, there's no way in the world that Crimea is ever going to go back to Ukraine. I mean, it's just not going to happen. He's built a bridge from Russia to Crimea now, and he's building a rail link, and I mean, it's just cast in stone. But to be fair to people in Russia, it's just like I told you, this analogy of Florida, being given to Canada and wrested back. It's the same kind of thing. But there's a much bigger and deeper issue, and it kind of came to me last night, because we were looking at the GDPs of different countries, and actually those figures that we were looking at were 400 a month kind of thing. It's actually, if you look at the 2017-18 rankings, the GDP per capita, there's some startling things in it. Believe it or not, Ireland is the 4th richest country in the world now, GDP per capita. The GDP per capita in Ireland is $82,000 a person.
Wow.
I mean, 82,000. And and Luxembourg is 120, and the other ones are only just above Ireland. So it's staggering that Ireland has achieved that level of prosperity. The US is around 62, the UK is around 43. I mean, who would have ever thought the Irish would be twice as rich as the Brits almost? It's amazing. But as you go on the list, Russia is actually at 27,000 today. And guess where Ukraine is? It's at 8,000. So do you really think the people of Crimea want to go back to Ukraine when they're going to take a third cut in their wealth and all their pensions and all the pensions they're getting from Russia and all that? It's not, I mean, they had a referendum that was passed 88% or something in favor of going or staying with Russia. And it's Russian territory. I mean, it was given by Khrushchev because he was Ukrainian. It was given back to Ukraine. That's where this issue started from. So, but prior to that was Russian territory for centuries. So and everybody in Russia is passionate about it, and it's very hard to change that. It's impossible to change that mentality. But there's a much deeper thing, and it's a financial situation now where almost nobody in Crimea. Maybe there's a few Cossacks or people there who might want to go back to Ukraine, or the remaining Ukrainians. And there's not too many of them. Mm-hmm. But and I think that needs to be explained to the world. And they reach. I mean, the easiest way to solve this problem is to say, listen, we understand Korea. You got a reasonable argument. Give you the benefit of the doubt. Forget about Ukraine. Clear out of Ukraine and stay out of Ukraine. I think is a compromise that will probably result in a deal being made. Not only stay out of Ukraine, stay out of everywhere else. I think that would be I think that's a deal that Putin would go for. So, but after what Pompeo said yesterday, this is much more of a issue than just kind of, reaching some kind of a deal on it and getting rid of the sanctions. It doesn't look like that's going to happen. So, in a kind of a curious way, Trump is actually stacking the leverage up against Russia in a lot of ways that give some room for achieving a breakthrough at some point. And the other thing is that see, people don't understand the mentality of the Russian psyche since World War II. They don't understand that 42 million people, 42 million Russians were killed in World War II, and they were our allies. And that's a really, really big deal in Russia. I mean, every Russian is like, that's drilled into them from day one at school. And the St. Petersburg massacre and the starvation of millions of people. I mean, the history is terrifying. I mean, it's, the Germans really stuck it to the Russians in ways you can't even imagine. And so they have a kind of a built-in fear of being encircled by any foe. And back in the early days of the 90s, they basically made an agreement with the U.S. to say, we don't want to see NATO in any state bordering Russia. Stay away from our borders. And of course, all of that has been broken now by the West, and that's really a big issue. That's a kind of in a way, with Trump stepping up the pressure and putting troops in some of these countries, it's not going down too well in Russia. But but the interesting thing is, it's a negotiation point, because I'm pretty sure that in this meeting that they had back in Helsinki, I'm pretty sure that Putin would have gone over all these points with Trump and given him a pretty good education of some of the history. And so there is a room for some sort of a deal down the road where everybody can live with each other and without threatening each other in the future. And I think that'd be a good thing.
Absolutely.
Yeah. So, and actually going back to Mexico, the GDP in Mexico right now is 19,000, or it's either 17 or 19,000, and it's about the same as China. But in the cities, remember, it's in Monterrey, it's about 30 or 40, and some parts of Mexico City, I think it's up much higher. But the GDP of Mexico is 1.2 trillion, and given you've only got 0.2% unemployment, so almost everybody in the population is working. So, and a lot of them, are earning the minimum wage. So, especially in the rural areas and that. So, if they double the minimum wage overnight, and they cut taxes as well, overnight, that's going to for sure take the GDP to about 1.6 trillion and possibly up to 2 trillion. So the overnight, literally, that is going to put Mexico as definitely the 10th largest economy in the world, possibly as close as 8th. It could overtake Italy and I forget the other country, but it would certainly, there's only a few countries who've got a GDP over 2 trillion that aren't, the big ones, and it would right up there. Oh, Brazil, it might actually overtake Brazil as well. So that would be an incredible development, and I think that it's pretty much baked in the cake. It's going to happen, and I think that. I mean, it's not every country can double its minimum wage overnight, especially the U.S., because that would really, the wages would be out of sight. But
well, yeah, and it's the pressure that it puts on the owners of small businesses is,
yeah, but that's a lot. But it's a lot less of an issue in Mexico. And so in other words, right. Mexico is one of the few countries in the world where can probably do that today without disrupting the economy. And since the unemployment situation is so tight anyway, it's it's probably the perfect time to do it. And the implications are really profound, because when the peso got weak, the people in Texas were complaining because they weren't getting the same buyers coming from Mexico anymore, and things like that. So this is going to change that overnight, and it's going to really have it's going to be an interesting thing to watch, to see just how much of a catch up and a more equalization Mexico is going to. I mean, look, it's probably 5 years, 5 or 10. The way I see it is 3 or 4 decades ago, or 5 decades ago, Mexico was, way behind the U.S. and has been catching up gradually, and it's probably 5 years behind now. It might only be a few years behind in terms of catching up. I mean, look what happened in Ireland. How the GDP went from like 40 or 50 to. I mean, remember, Ireland was in the Depression. 5 years ago, at the beginning of the decade, after the crash of 2007 to 2009. And remember, it hit Ireland first. Remember, I actually said it on the show. They had, I mean, remember, there's only 4 million population, and in 1 month they lost 43,000 jobs. That was the equivalent of about losing 3 million jobs in one month in the U.S. So it was a devastating, and it was like the canary in the coal mine. That set off a chain reaction around the world. And, as you know, everybody lost their houses in Ireland, the property market tanked, and there was all kinds of banks went belly up, and it took them and their debt was out of sight. I mean, it was almost unrecoverable, and yet they not only had a miracle turnaround. Look at where they are today. They're the #1 country in Europe in terms of recovery, without any doubt whatsoever. And in fact, in 2015, in the first quarter of 2015, the economy grew 21% in 1 quarter.
Really, in 1 quarter?
Yeah, in 1 quarter. Yeah.
And what do you contribute that to?
You know what? It just came off. It just has that sort of European spurt started in the 15-16 bottom that kind of kicked it off, and that's going to be something like that could happen in Mexico. It could have a sudden burst of growth that could just cement everything in place. And it definitely, I mean, look, raising the wages in Mexico will definitely deter immigration to the U.S., which is, there's hardly any Mexicans going to the U.S. anymore, because, as a matter of fact, there's a lot of them coming back. It's the Central Americans the problem, And Central America, if the U.S., maybe Trump will do something like this. It kind of needs a Marshall Plan. You need a Marshall Plan for Central America, and maybe even Latin America to kind of
explain a Marshall Plan.
Well, after World War II, Europe was in ruins. The cities are bombed,
right.
and there was just nothing around. And this guy who was Secretary of State called Marshall, he came up with this idea about going in and helping all these economies get back on their feet. So the U.S. really came in and just, through tens of billions of dollars into Europe to for post-war recovery, and it worked, and it kept the capitalism in Europe, because they were worried about Europe going communist again, and things like that. So and that's what they need for Central and South America now. Yeah.
Going back to the real estate crash that we had here in the U.S., the effect that had on Mexico, or at least a part of Mexico that I am very familiar with, which is Puerto Penasco or Rocky Point. It's the closest ocean to Phoenix. It takes you 6 hours to drive to San Diego, but you can get to the beach in 4 hours if you go to Rocky Point. We first started going there, 20 years ago or more. It was literally a sleepy little fishing village. As real estate exploded here in the U.S., we saw all these incredible resorts start to be built. Some got completed, but some, when the bottom fell out here in the U.S., I mean, construction down there, these huge resorts just ground to a halt. I mean, boom, you know, not a nail got hammered, and it stayed there. And you know, it was kind of like those ghost towns. We talked the other day on 60 Minutes, the Chinese ghost towns. That's kind of what these resorts along Sandy Beach looked like. You go down there, it was like it'd been an abduction.
Because remember,
well,
it's kind of like Miami, you know, Florida. The whole Florida market was, I mean, it took a long time for the Florida market to recover. And there were a lot of deals like that, you know, there were a lot of deals like that got, you know, that stopped in their tracks.
Yeah, well, the one bedroom, you know, the one bedroom apartments or condos, whatever you want to call them, that almost didn't get built, you know, they're flying high now, 275, 300,000, depends upon which resort and how many amenities are available. But yeah, the impact was just, now I realize that Rocky Point, Puerto Penasco is physically very close to the United States, and so it's going to feel the effect more than other parts of Mexico. But as a whole, how dependent is Mexico still on the U.S. compared to, oh, I don't know, 2000?
No, I think they may be more dependent. They're more interdependent than ever because there's so much trade going on between.
Well, yeah, that's what I was thinking, is that they rely less on us than they did, you know, 18, 20 years ago.
Well, I mean, in some respects they're independent, but in other ways they, you know, they're more dependent because I mean, look,
okay.
it's all story.
That's what I was trying to get at. Okay,
if the U.S. sneezes, you know, the Mexico gets pneumonia, and the rest of the world does as well.
Right.
So and you know, I mean, listen, the next time if we do hit the fan in 2021, 22, 23, it's probably going to be a pretty painful experience after this sort of glorious time, you know, decade plus long growth, to suddenly go into a recession, and it'll probably be a rough one, you know. Although the interesting thing is that, and the reason why I'm thinking this is because, you know, the 20th century pattern, if you like, is pretty similar to what's happening today, except this is an accentuated run to the upside. As we're going into 1918, 1919, 1920, but 21, 22, the market overshot, and then it literally went down and tested the 1907 bottom. So, you know, think about that. You think about this. You know, we go all the way up to maybe 30,000, and we, you know, I mean, remember the bottom in 09 was 666 or some 666,
yeah, it was
6,000.
Yeah. Mm-hmm.
So, you know, if it came down to 10,000 or 9,000, it would be pretty brutal. But the interesting thing is in 21, 22, it happened very quick. You know, it just went down and up, and it came roaring back up right away. And when it came roaring back up, that's what kicked off the roaring 20s. And I think something similar is probably going to happen. In other words, you know, what would cause that? Well, you know, one of the things that could cause it would be hyperinflation or high interest rates. You know, it'd be like 1979, 1980, where you get, you know, maybe things get out of control. We get into a bit of a hyperinflationary scenario, and interest rates go up to, I mean, if the thing about interest rates today, if interest rates go back up to 6 or 7%, it's a very serious problem for the U.S. because the cost of money, you know, we got so much debt now, 21 trillion. The cost of servicing that debt could walk out a good bit of actual net revenue. Okay. And that's the risk. That's a risk. That's a diabolical risk for the U.S. to have, because if we went to 21% overnight, which is, you can't rule out because it happened before, you could potentially have no net revenue coming into the government, because the cost of the debt could go through the roof under certain circumstances. Would just, it costs 300 or 400 billion or more per year to service the debt right now. It might even be more today. If that suddenly goes up to $1 trillion or a couple of trillion, and you only got revenues of say 3 or 4 trillion coming in, all of a sudden you're really going to be in dire straits. I mean, that would absolutely scare the Jesus out of the markets. I mean, that's the sort of thing that could absolutely turn this, devastate markets temporarily until things got under control. And about a hyperinflation would probably do that. At the same time, about a hyperinflation, if the dollar drops down 50% by 2021, 22, 23, you could get the same ingredients that caused the 87 crash. When you look back at the 87 crash, you can hardly see it on the chart, even though it was a very big event, but it was only a fleeting moment in time. The real crash only lasted for 3 months before the market started recovering, and 3 years later it was at all-time highs. Something like that could happen in between 21 and 23, in my view.
Now, the GDP in Ireland that we were talking about, what did you say, it was the fourth highest in the world?
It's fourth highest, 82, fourth highest, yeah.
And so how much of that relies upon U.S. companies that hold money there?
A lot. That's a lot of it. That's one of the reasons why. See, I mean, Ireland is almost like a tax haven in some respects.
Right, exactly.
And
yeah.
If you want to know where the richest countries in the world are, most of them are tax havens.
Yeah, that makes sense, doesn't it?
Yeah, it sure does. It sure does.
And what's the danger of that going away? What's the chance that Trump incentivizes companies here in America? In fact, I thought there was a deal already in the works to bring that money home.
There is. I think Ireland is lucky because they've got, I don't think the employment situation is quite as good in Ireland as it is here, but they have discovered some oil and gas right outside our house, in fact, in Kinsale, within a few miles of our house, they made a big oil discovery. Yeah, right. and so that's helping. That's made them potentially self-sufficient in oil. I'm not sure about that, but certainly partially sufficient, and that's a big deal in of itself. But the benefit is they have, when you've only got 4 million people, and you keep bringing in, they've got a very good industrial development authority that promotes all kinds of companies and things to come in. So if you get enough business in, you basically create full employment for yourself. So as long as they can maintain that, they're pretty well insulated from problems for the foreseeable future.
Interesting.
So they're kind of what's the word? Their destiny is in their own hands to a certain extent.
No, I follow you. What about that company? What was it? Blue?
Oh yeah. It went down. It went down a lot recently. In fact, it's going down today after a rally yesterday. I was looking at it. It's had a pretty big fall from the highs, this stock. In fact, it's overall it's got a, when you look at the big picture, it's
Bluebird
it's
Bio,
having
that's the company?
yeah,
Okay.
it's having a it's having a correction. You know, it's gone up to 235, 234 down to about 150. It's currently 167. You know, this is a pretty powerful company. It's gone from as low as the teens, you know, 17 or so, up the first time, up in 16. It ran up to 200. Geez, it ran up to 200 and came down to 35 before going back higher. So
yeah,
this is
I just pulled it up on the weekly, and so this is back in 2015 when it put in that high up. Almost.
Yeah, I mean that kind of structure that it's making here. If it were to break out above 180 and start heading back up again, you could go a lot higher in this stock.
So I'm not a pattern recognition guy, but is there a cup and handle thing going on?
Yeah, I mean
here?
potentially there is, because actually if you can squeeze it up a bit,
yeah,
show more.
That's it.
Yeah, I mean, you know, the fact that it's consolidating around the previous high and not going down in the same way as the previous high did is kind of, you know, is kind of constructive, especially if we were to, I mean, look, if depending on how the market goes, if we spend a few more months going sideways and this thing holds in between 160 and 200, it could break out and then in 2019 to new all-time highs, and maybe go for a pretty big, you know.
Hey, look at this gap higher open. Oh no, wait, this is on a week. This is a weekly chart, but nonetheless, I mean, here we are. Oh, this was on earnings. Okay, right here on earnings, they had a gap higher open on the week, and then sold off pretty hard.
Yeah.
Yeah. Now, let's see. Who was it that asked that question? Frederick, I believe. Frederick, are you currently, do you currently have a position in this company? Or, of course, you don't have to disclose it if you don't want to, but curious if you're long, if you're short, if you're looking to get in, what your goals are. Is it a trade, an investment? Options. Okay. All right. You just went right over my head there. John can take options, but...
yeah, I mean, it's probably a great stock to trade options on if you got the stomach for it, you know.
Mm-hmm. He's looking at the
a couple
August
of things.
17 calls.
Yeah, a couple of things on the. I would wait. You know, I'd wait for this thing I'd kind of wait for this thing to get a bit more strong before going into that. I'd like to see because it's slightly negative right now after dropping today. I'd like to see it sort of look like it's going to break out before doing that. Personally, because there's a lot of risk in the market over the next couple of days if things don't go right. And incidentally, the coffee, which has had a couple of bounces, pretty strong bounces off the 107, is coming off again, and it's down again today, and it kind of looks like it might be heading for new lows. And the lumber wasn't able to get up much above 495 or so, and it's gone limit down again. So the lumber story may be over for the time being until we get a hurricane or something. It's got a better shot of going down into the 460s now, maybe even the 450 area. before it might turn around. And remember, you know, some of the housing statistics been coming out recently have been pretty bad.
What month are you in on lumber?
September.
There we go. Yeah,
it looks pretty bad. Yeah, that three wave pullback looks a bit incomplete. It looks like, remember we said it looks like it needed to go down to about 460. If it were to spike down and then reverse, then we could be set for some upside. Oh, by the way, incidentally, the Chinese markets are all down today as well. after their valiant move the last couple of days.
When we ran over the numbers at the beginning of the show, let's see, I've got them right here. Oh, it's right here. There we go. Yeah, European markets were all positive at the close, but Asia, the Nikkei lost 27, Shanghai lost 20, and the Hang Seng lost 139. So, I mean, not a big loss, but still in the red. Yeah.
How can you put up the yin there? YINN.
You want just the 6E, not a currency pair, right?
No, win. Yeah. YINN.
Oh, win. I thought you said yen as in Japanese currency. Okay, gotcha. All right.
Yeah.
Here we go. Win.
No, yin. Well, put up yin win as well, because that's this is a chart that's bothering me because LVS came out and they're down today, I think, which is in the same boat as Win, same business.
Well,
Las Vegas Sands.
Stem from Macau, right?
Yeah, and it doesn't. If turned down from here on the Win, that would be a bad omen, because these gambling stocks tend to top out, a year before the market, at least. So the top looks like it's in on Win, and it probably is on LVS as well. Just stick up LVS.
LVS. Okay, that's on a daily chart.
Yeah, you see that gap down today? That's a.
Yep, on earnings. Yep.
Yeah. So, yeah, YINN. So look at that one.
YINN.
INN.
Okay, that's one I'm not familiar with. Okay, this is the China.
Yeah, actually, it's not too bad. It's not too bad. It's come back a bit.
Tell us what this is, please.
It's a triple of the FXI.
Of the FXI. Okay.
So it's not as bullish as that Shanghai index. The Shanghai index is kind of a stronger looking index. It's a more broad index, but this I think this is the big caps in China.
Well, they had a couple days ago. They had a.
Yeah, I mean, look, that's kind of a good omen. By the way, we just called this last rally in the market, and it looks like it's coming off again now. The market's, to be honest, it's acting fairly heavy. The S&P and Dow, the Nasdaq in particular, and the Russell are all looking a bit on the heavy side. Which less so on the S&P, but the Nasdaq still looks pretty heavy.
The S&P is just kind of rolling sideways here. Doesn't seem to have much energy. Same with the Dow. It's holding on to it.
Yeah, the Dow is looking. You know what? I got a feeling the Dow is going to hit a new all-time high here. The way it's been going up, it might actually get to a new. It could even get, if we get through tomorrow, and have a strong week next week after all this, the likelihood of the Dow getting to a new all-time high actually goes up. It goes up quite a bit, and the S&P as well, for that matter.
Everything's quiet. Gold's.
What could be shaping up, which should not be very good, is given what's happened to the Nasdaq now. If the Dow and the S&P charge higher, so that they end up emulating the Nasdaq profile, and the Nasdaq doesn't make a new high here in next month, that would be a potentially bad situation. That would definitely put us on track for some kind of a pretty big pullback into the fall. The gold, look, it really looks like gold's going to test this low end one more time, either going into tonight or tomorrow with this GDP number coming out. You know, how gold reacts to that is going to tell us a lot. If it spikes down initially and then reverses upward, that would probably be pretty constructive. We'll have to wait and see. If it would go straight up from here on that number, that would be even more, potentially even more bullish. But right now, I'm not too keen. You know, I'm not too. The gold is a little bit. If it holds here, that would be good. But I've got a feeling it's going to spike. It's going to test, maybe to try and put in some sort of a double bottom. But the rest of the metals not acting too bad. The palladium is actually performing quite well, considering it got such a beating. The platinum has gone a bit limp, overnight, which is weighing down the market. So the gold, it really does look like it's going to go down and test these lower levels one more time.
So our lowest weekly trading zone this week for gold, and all the way down to 1189/90. I don't anticipate it going there between now and the end of the week tomorrow, but
I don't know. There could be a lot of drop if this GDP number comes in at 5.3% or somewhere like that. You know, they could. I mean, it'd be almost like that never happened before. It could have dramatic implications for the markets. I'd say the volatility could be tremendous.
What number are the analysts looking for?
Between, I think, between the range is 4.1 to 5.3, and oh, damn, just the range is 4.1 to 5.3. I'm just looking at this thing.
Yeah, I'm going to pull up my economic calendar, and it should tell us what the projection is tomorrow. Okay, U.S. GDP right here.
4.1%.
Yep.
4.1%. So
that's the forecast.
So it's set up for potentially a gain. You know, if it comes in at 4.5, it's a win. If it comes in at 5.3, it's a huge win. You know.
Now the previous one was 2. So I mean, they're looking for this thing to double.
Yeah, exactly.
Why?
Yeah.
Why is everyone so bullish? What is there any one particular
just projections? You know, the projections that you know, there's a lot of calculations on momentum and stuff. You know, and the Fed, the Atlanta Fed. Hang on a second.
Go ahead. Okay, so the only high impact news that we have tomorrow is the GDP that we were just looking at. 3 steerheads.
Yeah, the Atlanta Fed said it could come in as high as 5.3. So.
Oh, really? Well, tomorrow morning at 8:20, FOMC member Bullard is going to speak. I don't know about what. He speaks at 8:20, and then the GDP comes out at 8:30. So those two may be tied together. I don't know.
Yeah. Okie doke.
So that is the only high impact news tomorrow, except for Russia's interest rate decision, which doesn't. It's a high impact news event, but I don't think it's going to sway us too much one way or the other. So. We may find out that collusion is going to cost us more in the future. I don't know, but hopefully we've saved for a rainy day.
Okay.
All right, buddy.
Okay, much obliged.
Thank you
Thanks.
so much, John. Have a great afternoon, and we'll talk with you same time tomorrow.
You too.
All right. Okay, guys, that's going to wrap it for us today. We had no trigger there on gold. On the ES. triggered long. Not a lot of room to run. 72 points available on the Dow. 15 points available on the Russell. Crude oil. Gold, no trigger. More no triggers. NASDAQ, no trigger. And soybeans. 7 points so far. $50 a point. Had a gap higher open. And as here it is again with futures. With futures, you almost always see that gap close. It's just a thing with the futures, because we don't. Again, I said this yesterday, I know, but we don't get a lot of gaps during in the futures market, except during earnings season. Now, sometimes we'll see it on soybeans, simply because of the nature of what it is. It's pretty rare on crudes. It's a physical soybean. It's a physical. You could hold it in your hand, right? A soybean. Gold, crude. These are tangible things. But the S&P, the Dow, the Russell, NASDAQ, these indexes, I mean, it's not a physical, tangible. And so the trading on futures is typically much smoother from opening to close. Again, during the week, only closed for an hour, and 5 p.m. to 6 p.m. Eastern. So we do see some gaps on the Sunday night Globex Open, but that's typically it, other than what we get during earnings season. And this is just something that soybeans will do from time to time. So 7 points, and it looks like it still wants to come off a little more, but it's time to close, if not already closed. Yeah. All right. So there you have it. All wrapped up. And look at bonds. I looked at bonds a lot here late. Let's see. Come on. Okay, bonds. Yeah, I mean, look at this quiet week in bonds here, just rolling sideways. We went through a period there where we had so many $1,000 and $2,000 swings on a daily basis. If bonds go from 144 to 145, 1 point, there's 32 ticks to a point, pays $31.75 per tick. That works out to $1,000 per point per contract traded. But when it's moving like this, well, let's get it down to a little smaller time frame. There we go. That's yeah. The patient doesn't look well. And there we go. Thanks so much for tuning in, guys. Don't forget, Partners Workshop tonight. Partners, email your questions ahead of time, and we'll hit those first, as we always do. We'll hit those first, and then we'll take questions live in the workshop if you're on the trial. And you want to be in the workshop tonight, you do have to be a partner. So you should have received an email from Michael that tells you exactly how to become a partner. If you did not receive it or can't find it, or the dog ate it, whatever the case might be, by golly, send an email to support@cfrn.net. We'll resend that email. Or if you have questions, you can email those. Or if you want to talk, 949-423-6464. 949-42-E-MINI. All right, that's going to do it. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.